can really demonstrate value in terms of bringing resources to bear, whether it's operational, technology, human capital, or business, strategic, corporate development initiatives. The industry has always been in the business of pricing uncertainty, right? And that's partly what I love about insurance. We're obviously facing a retirement cliff and a lot of true technical expertise in insurance that we're trying to backfill. We're trying to move the ball forward and create value.
Hello, everyone, and welcome to a new episode of the Insurance Distribution Podcast. I have the opportunity today to be speaking with Joe Zook, operating partner at Altamont Capital Partners. Hey, Joe, how are you?
I'm well today, Martin. Thank you for the time this morning. I appreciate it.
Where are you calling from?
I'm calling from Dallas, Texas today.
Excellent. But you're sometimes in the UK, in other countries in Europe. You're sometimes in New York. You're all over, if I understand correctly.
I am all over. I often joke that I'm often on American Airlines 2B is my home. So yes, but I do fly quite a bit across the US, UK, Europe, and globally as well. But generally for business, but also for pleasure from time to time as well.
Excellent. So thanks for the time. I'd really love to understand what you guys do at Altamont Capital Partners and at the same time, your insurance background. So maybe we can do this as an icebreaker. Tell us what you do at the firm and at the same time, what has been your background in insurance.
Certainly. Thank you. Yeah. So Altamont Capital Partners is a private equity firm based out of Palo Alto, California. They've been operating for over 16 years with about $4.5 billion under management. I always like to say, Martin, three things make Altamont unique. One, the fund lives are 17 years in duration, so long-term oriented investors. Two, I think they're deep and active is in their four verticals, which is financial services, primarily insurance, but also specialty finance, industrials, business services, and consumer multi-unit. And thirdly, we're very management centric. So we're much more operators and business builders alongside management teams in the portfolio companies we invest in. My personal background, I grew up on the reinsurance brokerage and underwriting side of the business. I was very fortunate or perhaps deliberate to take what I experienced today as an operating partner at Altamont and as an investor and working alongside our portfolio companies to build a really nice baseline and foundational understanding on the reinsurance side of the equation. And for maybe your listeners that don't understand what reinsurance is, it's insurance for insurance companies in the most simplest form. And reinsurance brokers act like investment bankers for insurance capital. And so I did that for the first decade of my career, both broking and underwriting. And then I like to say I went to the primary insurance side and got an MBA in primary insurance in some ways, working as an operating executive for two MGAs, building out their commercial and property divisions from scratch, running corporate development and strategy. For one, I brought in a private equity minority investor, and it was an incredible entrepreneurial sandbox for me to really develop and grow as an operator and student of the industry. After about 7 years there, I had a great opportunity to join Altamont as an operating partner at the end of 2019. I had known the firm since 2015 when I cold called the investing principals with an idea to a MGA roll-up strategy back in 2015. While we couldn't find a platform that made sense at the time, we stayed in touch, and there was a great opportunity in a shared vision of building an insurance ecosystem that Altamont's developed with 9 portfolio companies today that I've been able to be a big part of in growing. So suffice to say, throughout the 23 years of my career or so here, Martin, I've been able to, think like an owner, an operator, an underwriter, and investor all simultaneously. And I think gives me a unique lens into the industry.
Excellent. Two questions that come from this experience. And by the way, congrats on all the journey. On the one hand, you mentioned 9 portfolio companies that you currently have on the insurance part. Do these happen to have similar characteristics? Do you focus in a specific part of the market or you're generalists? And at the same time, what is your current role as an operating partner? What does this mean? Sourcing new companies to acquire as part of the roll-up, or also operating to bring efficiencies into these 9 companies that you already have under the portfolio?
Good, great questions. Thank you. So first, we have built, alongside the insurance vertical. So, and maybe in some ways a generalist, but we have kind of more specialized in both balance sheet businesses as well as insurance services businesses. So we have 4 balance sheet portfolio companies, Accelerant Holdings, Hadron Holdings, both in commercial P&C insurance, focus more in the MGU, MGA channel. Fleming focused on the legacy runoff channel, and Couvert on the life and annuity side. And then on the insured services, 3 MGA platforms, a reinsurance broker, and a claims TPA. As an operating partner, I really like to say that I act as a force multiplier, right? So my day is quite varied. So one day is can be board work alongside our investing principals and the management team, attending, participating in board meetings. But my day to day really varies quite widely. So it can be anything from bolt-on M&A to maybe a divestiture of something that didn't work out, to oftentimes recruiting talent and human capital to our portfolio companies, to other times, sourcing a vendor or contact, or taking almost an interim role at our portfolio companies and executing a project or a special initiative that we're trying to move the ball forward and create value. So I get to really spend, half my day, or one arm, I like to say, in the businesses that we do and that we invest in and help grow alongside the management team, but I'm not employed in them. At the other, get to look at new opportunities, source new opportunities, and alongside our investing principles here, make decisions about where we might invest in next, or where we might spend some more time seeing if there is an investment to be made.
Excellent. Because just to clarify, the investments that you have done as capital partners, you keep the brands independently. So these 9 firms
We
are
do.
independent firms. Okay. So your approach is bring them in terms of infrastructure, operations. Do you also bring technology as piece of them, or they operate independently? Their owners are still there, so you let them operate the way that they run their
Great
business. So how
question.
much influence you
Great
bring?
question. So each portfolio company stands on its own, right? But we do encourage collaboration, right? And they do collaborate and work together, but we never force it. Secondly, we do help them with operations, technology. So prior to this call, I was on the phone with a potential COO for our claims, organization. Yesterday, it was, making introductions to some key vendors for some of our MGA investments and the claims platform as well, because it's relatively recent investment we've made. So it really runs the gamut. But each one, operates separately, retains their brand, oftentimes retains their founders and owners, and then we augment and bring either key personnel that help build the business going forward, and or technology or add-on M&A that makes sense to the business at the time.
Okay. And putting this on the broker side, whenever it's coming to a decision to join Altamont in this case, there has been a consolidation wave happening the last 10-15 years of insurance, not only in the US, but also in Europe. A lot of different roll-ups have been popping up, some very vertical, like very insurance under the same umbrella, others like Altamont that keeps operations independently but brings capital efficiency operations, as you said. What are the key things that, based on your experience collaborating with these brokers, that they value when joining a firm like Altamont? What is in their mind to be able to join? They have already a successful business. They have been running for a while. Usually, probably these are big companies that are already profitable and running correctly. Like, what are the key things that they appreciate when joining a platform like yours?
Yeah, no, great question. So, why my prospective company or investment wish to, take in a capital from Altamont, or, join our stable of portfolio companies? A couple reasons. One, they may want to perpetuate the ownership of the business. Two, they may look for additional capital to fund expansion and growth. Or three, they may say, look, we want to do a combination of both clean up our cap table, exit some prior owners, right, who've been in the business, and allow them to get some liquidity and build our business and take it to the next level. So it can vary for a whole host of reasons. Oftentimes, where we differentiate ourselves from maybe other PE sponsors in the space is that, we have a track record of successful investing. We are deep domain experts in insurance and reinsurance. And thirdly, we work collaboratively with the business and, can really demonstrate value in terms of bringing resources to bear, whether it's operational, technology, human capital, or business strategic corporate development initiatives that really accelerate the growth and the value creation for those companies.
Excellent. And maybe to the point about technology, Altamont being originally from Palo Alto, operating across not only the US, but also Europe. But I have a bias to say, okay, technology is probably part of the DNA of the firm, or at least it's embedded in a world where technology is moving as fast as any other piece in the part in the world. There's a lot
Yeah,
of
that's
hype. No, go ahead.
I was gonna say, yeah, no, I think I know where you're going with the question and so forth. Yeah, there's a lot of, obviously in the Valley, Silicon Valley, Palo Alto, the heart of the US tech sector and San Francisco and the Bay Area as well, right? We are not pure play tech investors per se, but I would say everything that we do with our portfolio companies has a technology bent or has a technology theme to it, right? And utilizes and deploys tech. So we're very fortunate to be in that ecosystem where we can find early stage companies and partners, really great talent from the technology side, and bring them into our, maybe what's called old school insurance, portfolio companies, whether on the balance sheet or services side, and refresh. And I think what's really neat is that a lot of folks from maybe outside the industry on the tech side may look at insurance and say, hey, that isn't interesting or sexy. But once they kind of unpack and lift the covers off a little bit, they're like, wow, this is an infinitely fascinating industry that's rich in data, has total greenfield on the technology side, and really touches every element of the economy. And I think it becomes really attractive to folks in the tech sector, the value you can create and the potential deployment of technology in this industry.
Yeah, I was actually gonna get into that. Like, insurance per se usually has not been a sexy business for a lot of technology companies. Right now, there has been this AI roll-up strategy going on. Other than, of course, technology companies serving the insurance market, but then this AI strategy. This all comes to this Sequoia kind of vision that the next $1 trillion companies are going to be services companies with AI, and then like white collar labor as insurance brokers have a huge opportunity because they have a lot of inefficiencies in the way they operate. So there have been a couple of AI roll-ups coming to the business. Guide is one of them, very focused on the healthcare market. They were financed by Lightspeed. Then there's other in the US that is called Kovu. In the past, there was WeFox in the European market, not with an AI play, but technology play. What do you think about this strategy of putting AI in the center of the operations of the roll-up companies that you bring to the table, but at the same time, it's a private equity play because you're stacking companies that should increase their value over time? How do you collaborate with this kind of technology inside Altamont? What is your vision about it? Yeah, I would love to know your thoughts around.
Sure. Yeah. No, I mean, so I think where, AI is improving things in the insurance industries in a number of ways, right? First on the claim side, right? Triage and subrogation identification. What really is becomes pattern recognition, right? Which is a lot of what the large language models are quite good at across large data sets. Data ingestion, of course, right? Submission clearance, risk scoring, intake, fraud detection, is another, and document extraction. I'm still kind of lukewarm on AI bots and things like that. I'm not sure outside of personal lines, there's some guidance, but most people do get kind of frustrated with them a little bit. And they still want that human touch and element. I think there's still, though, a clear disconnect between AI utilization and resourcing. And, so it's still very, very early here, Martin, on that. People are using it maybe opportunistically than variously and tactically than strategically. I think that will change over time here. So that's kind of where we're trying to build a strategic framework, first getting the fundamentals and the principles right, getting data clean and correct, and that base established. And so then we can start doing all the fun things with AI over time with each one of our portfolio companies.
Makes sense. And now shifting to another area which is of very relevance, particularly in the insurance sector overall, is the ability to acquire young talent. As you put it, insurance is not a sexy industry, maybe for technology in the past. Now we are seeing a change, but mostly for young people, usually they don't say, okay, I want to work in insurance, unless they usually have a past of their
Sure.
family
Or
in a firm,
family.
etc.
Yep.
Exactly. What have you seen from these 9 successful companies that you're operating at Altamont or other companies to be successful at attracting young talent that could become the leaders of the future of the company? What have you seen as good practices that could embed this not only energy but mindset to improve the firm over time and not just let it, okay, this is something that worked in the past but would probably not work in the future?
Yeah, no, great question. So I think a couple things. One, we're obviously facing a retirement cliff and a lot of true technical expertise in insurance that we're trying to backfill, right? I think tech gets us, partly way there, but there's a lot of tribal knowledge that I like to call or inherent knowledge that needs to get passed down. I think the real opportunity here is really three things. One, attracting talent with economical alignment. There's great upside depending on not just commissions, but true equity and building meaningful stakes in business and profit sharing, right? Whether that's on the underwriting side or something that's PE backed or so forth. Also, I think insurance affords a lot of autonomy, right? And so can take you, a lot of travels, can get you exposed to a lot of different facets of the global economy. And so, that autonomy, obviously with guardrails, can allow people to ignite their entrepreneurial ambitions in what they do and, still have those kind of buffers of being part of something larger. And I'd say thirdly, we talked about it earlier, but tech, as a magnet, right? I mean, I think that ability to kind of use and deploy tech in old school industry, as I like to call it, in a greenfield where maybe the competition isn't quite so strong is another attractive element. So yeah, those are some of the, tools that we've been able to use to, bring best in class talent to our portfolio companies.
Excellent. And then moving to my final question about the debate. Considering technology, considering talent, consider the current landscape of insurance, what are the key things that you think agencies, owners, or broker owners should look after to be resilient businesses to these changes that are going on, not only in tech, in talent, but given that historically the intermediate has been death, like from new technology, it brings death to the intermediate, and reality has shown that this is not the case. What do you think in this current landscape that the resilient businesses will have that maybe some that they don't have it will probably end up dying?
Whoa, good question. So I think a couple things. One, thinking about that, first and foremost, I think just operational discipline, right? Whether it's if you're on the underwriting side, having underwriting discipline throughout the market cycle, whether it's a soft market or hard market. I think the organizations that stand the test of time here are the ones that can demonstrate profitability and discipline throughout the underwriting, pricing cycle. Two, we're obviously kind of in this increasingly becoming I think a multipolar world here. And then being cognizant of, how you navigate and build your business in that, right? So balancing specialty lines like trade credit, political risk, marine cargo, terrorism, et cetera, against maybe some more mid-market commoditized, businesses and hospitality, retail, mercantile trade, et cetera. Right. And knowing that you're going to have a balance depending on the market and your maybe localized expertise and domain. I think that's going to shape how insurance, looks in the years to come. In terms of also where the industry is going, I think we're certainly seeing integrated platforms, risk capital coming closer to risk distribution. I think standalone standpoint solutions are shrinking in this market. Not to say there aren't some great independent solves, and that will always be there as part of the business. But I think that will start to get consolidated, as part of larger platforms, and folks that are building towards that, remain important. To kind of maybe close that point out, Martin, the industry has always been in the business of pricing uncertainty, right? And that's partly what I love about insurance. And I think where it's different now is that uncertainty is structural, from a macro standpoint, monetary, geopolitical, et cetera. Climate is a big thing we didn't even talk about, and tech, right? Which we spent a lot of time, and it's all really accelerating super fast here. I think the leaders and the platforms that will stand out who build enduring, durable organizations are the ones that understand resilience isn't necessarily about predicting the next crisis. It's about building businesses that can absorb and adapt faster than the cycle we are. So I think that just means we're all going to work harder, faster, but hopefully smarter as well. But we'll have AI and technology solutions to help augment and guide the way. So anyway, hopefully that's kind of helpful views and perspectives of the business over the next couple of years.
Absolutely, like exciting times certainly ahead. It's great that you could be sharing this from the experience of already building this career over and over the years. And to end, we have a final section, which we become a little bit more, not only Joe the professional, but also Joe the person, to get to know you with three small questions. If that sounds good, I can drop them. The idea is that you reply back with a short answer. It's like a ping pong. Okay. The first is, if you were to recommend a book, which book would you recommend the audience?
Against the Gods, which is one of my favorite ones about insurance. It goes through the history of insurance.
Against the Gods. Okay.
Against the Gods. And I can't remember the author right now, but if you put it in Amazon or your local book, you'll find it.
Excellent. If you were to have dinner with someone dead or alive, which person would you pick?
Oh, wow. Good. Maybe Barack Obama would be in it. Yeah, Barack Obama would be a good one off the top of my head. I think he's got a great story.
Excellent. And finally, which has been the band of your life? If you were to put one band from any type of genre that you could pick.
Oh, band of my life that I've maybe I like Bob Marley. I like a little bit of reggae. So there we go.
Excellent.
Bob
Good
Marley
vibes.
and the Wailers. Yeah.
Okay, great. Joe, this has been a great conversation. Thanks a lot for taking the time. We know you're super busy in different American Airlines flights, so I appreciate the time. And hope the audience enjoyed it as much as I did.
Thank you very much. I really did. I appreciate the time this afternoon.
Excellent. Until the next one.
Have a great day.
Cheers.
Cheers. Ciao.